There are so many videos out there on how to level up your finances, how to start investing, or how to reach financial independence. But I feel like what most people don't talk about are the absolute basics. I don't just want to be assuming that everybody knows these basics. Maybe you never had anyone explain to you these basics, and in school they definitely don't teach that. At least not in the school that I went to. So in this video, I'm going to teach you about the absolute basics that everybody needs to know about money to avoid mistakes that can get you in serious financial trouble. By the way, if you have a question about a topic that I'm not talking about in this video, I mean I can't talk about everything, I don't want to make it too long, then let me know in the comments down below and I can address it in the future video. If you're new to this channel, hi, my name is Rebecca. I studied finance and accounting, and my big passion is personal finance. That's why I'm doing these kind of videos. I really want to help people like you out so that you don't have to be looking for that information on the internet or in different books. I just want to share what I've learned throughout the years. So let's get right into the video. Let's start with taxes. And no, please don't skip to the next section right away because it's not that boring. I thought I would hate the subject in college and I really liked it. So let me break down the most important things for you. First of all, let's get that out of the way. If your taxes are automatically deducted on your paycheck, there's not a lot you need to worry about, so you can relax. But if you're self-employed, if you have your own business, you have to take care of that. So the money that you make is not automatically yours. Some part of that money belongs to taxes, belongs to the government. You always need to put money to the side that belongs to taxes. If you don't, you will be in big trouble the day that you have to pay your taxes, because where are you going to get that money from? A good rule of thumb is to put away around 30% of your income in taxes. So when you make $1,000, that means you put $300 into a separate savings account that is only for your taxes. You don't spend that money. Depending on the country you live in, depending on how much money you made throughout the whole year, and depending on what the tax percentage is, you might not need all the 30%, all the money that you save. Maybe you need to pay a lower amount. But better be safe than sorry, so rather have more money in that account than too little. The second thing I want to mention about taxes that concerns everyone is in most cases it's very useful to file for tax return. So why is that? Well, the government knows how much you made in a year and that's how they determine how much taxes you need to pay. What they don't take into account is that you might have had business expenses or also other expenses that are necessary for your work, even if you're not self-employed. There are many types of expenses that you can actually deduct from that income that you don't have to pay taxes on. So that means your taxable income will actually decrease. But how is the government supposed to know what you've paid for, what kind of expenses you had if you don't tell them? The government also doesn't really care because it means that they get less money. So if you want to take advantage of that, you need to file a tax return and let them know. There are so many kinds of expenses that you can deduct from your income that will decrease the amount of taxes you need to pay. So it's really worth to inform yourself what these expenses are in your country and how to file a tax return. So Google it, read about it, or get help from a professional so that you can get the money back that you paid too much in taxes for. The next one is a very short one, avoiding fees. I mean, who wants to pay unnecessary money in fees? But maybe there are some things that you didn't even know can result in fees. So let me give you some popular examples. Your bank account. If you go into the negative of your bank account, that means you spent more money than is on your bank account, you will have to pay fees. Next up are your bills or other payments. Many late payments can result in fees, so be informed and try to avoid paying late. And taxes, we already talked about them. If you don't pay your taxes, obviously there can be a hefty fee, but you can also get jail time. So that's a very serious topic. So make sure to pay your taxes and make sure to respond to the government when they ask you about things, because usually that's mandatory. Let's talk about investing next. So if you want to invest, you need an investment account that is either with your bank or a brokerage, depending on how things work in your country. Once you open the account, you can transfer money into that account, but be aware that then you need to still buy your investments. If you just have that money sitting in that account, it doesn't do anything. There are no investments bought yet, so make sure to actually buy something with it. The same goes for investing with your employer or government. So if you have a 401k or something, you also need to make sure that that money that you pay into that account actually gets invested. So just inform yourself whether that money is already invested or whether you have to take any steps. So now you have your investments. And obviously you can make profits, you can make money from these investments. Be aware that you need to pay taxes on all of your profits. That means as soon as the profits reach you or your account, you usually need to pay taxes for them. So whenever dividends are paid out, or whenever you sell an investment and you've made profit off of that, for the amount that is the profit, you need to pay taxes on that. In Germany, it's 25% in taxes that you need to pay, and in Germany, usually it's also automatically withheld by the investment account. So you don't have to worry about the taxes, you only get the money paid out that is net of taxes. Make sure to find out how it is in your country. Do you get the entire amount paid out? If yes, you need to put away money for taxes. You need to put away the percentage that is owed for taxes, and you cannot reinvest that. If you need to pay money for your profits, obviously you can offset your losses. So if you make $100 in losses on your investments and then 2 months later you make $200 in profits, that means you only have to pay taxes on $100. Usually that is automatically calculated, but it's very good to know how it works. So whatever money you make from your investments, make sure to also state that on your tax return file, because that is also another source of income that you have to state for the government. Let's talk about debt next. In general, you need to know that whoever is lending you money, whether it be a bank, a private company, or even the government, you will have to pay interest on that money, because nobody is going to give you just free money because they're nice. That's not how the world works. So let's say you buy a new TV that costs $500 and there's the option to finance it, so you don't have to pay it all at once. Sounds nice, but it has a 20% interest rate. And if you only make minimum payments, let's say that's $25 a month, then you will end up paying a total of $613, and it will take you a little over 2 years to pay it off. So you will have paid over $600 for a $500 TV. That doesn't sound like a good deal to me. So think hard whether you actually want to get a loan. Do you really need it? Usually when you buy something with debt, it means that you cannot really afford it. And as we have seen before, in the end you'll end up paying even more. So you haven't been able to afford it in the first place, and it will put you in a worse financial situation months and years from now. So if you want to be smart about your financial situation, avoid debt whenever possible. There are some exceptions, like the loan for your house, your mortgage, or maybe a loan for a car. But the rule of thumb is really to avoid it whenever possible. And remember, just because you can get a loan, let's say the bank offers you one, or somebody says you're eligible for X amount of loan, that doesn't mean you should get it. Remember that they want to make money off of you, not be nice to you. A special form of debt is the credit card debt, so let's talk about that next. So how do credit cards work? Well, you usually have a limit on your credit card. Let's say you have a $5,000 limit. That money is not yours. That is the money they are borrowing you as a loan. So you can take that amount of money, and at the end of the day, you will have to pay it back. And if you don't pay it back within 1 month, you will have to pay interest on it. Each month you get a credit card statement that tells you how much money you have spent. Let's say you spent $1,000, and then it will tell you a monthly minimum amount that you need to pay, a minimum payment. Let's say that's $300, but what does that mean? It means that if you pay back the $300, you have the $700 as a loan. You need to pay interest on the $700. So the next month you can still buy things with your credit card, but only for a maximum of $4,300, because that's the remaining amount until the limit of your credit card. But for every dollar that you did not pay back, for the $700 for example, anything that you did not pay back after getting your credit card statement, you're paying interest on it. And credit cards usually have high rates of interest. At the moment, it's around 10 to 30%. Many people fall into the trap of paying way too much interest on their credit cards and not using them right. So don't make that same mistake. Don't pretend like that money is yours. It's not yours. If you cannot afford something, that means if you cannot afford to pay that back at the end of the month, then don't put it on your credit card. If you make sure to always pay off your entire balance of your credit card, that means the entire balance that's on your credit card statement, then you don't have to pay interest. If you use your credit card responsibly, you can actually take advantage of the points and the reward system, but don't let the credit card get you in big financial trouble. Let's finish this video off with some final general things that everyone needs to know. The first helpful tip is to always make sure to have money in your bank account and not spend all of it until the next paycheck. Why is that? Well, there are some yearly bills that you might not be thinking about, that maybe in 2 months you need to pay X amount. So make sure to have some money in your bank account to cover for these yearly or quarterly bills. Or some emergency expenses. That's what we usually have an emergency fund for. Or if you're self-employed, make sure to be prepared, because there will be some months that you will make less than in other months. And the last thing I want to say is be aware of your money situation, of your financial situation. Don't just close your eyes because it's more comfortable or because it's easier. If you know where you stand, if you know where your problems are, then you can actually improve. Make sure you know how much money is in that bank account. Make sure you know how much money you spend, and make sure you stay in your budget. But that's another topic for another video. I hope these absolute basics were helpful to you, and now that you know them, you can fine-tune your finances. So you can take different topics that you want to improve next. If you like this video and if you want to learn more about how to optimize your finances, then make sure to subscribe to my channel to not miss another video. I hope you have a great rest of your week, and I will see you in my next one.